Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York on Wednesday, the 27th day of August 2014, and this is the daily report for gold and silver. Dow Jones continues to climb higher over 17,000 today, but a weaker dollar has been supportive of gold, and the precious metals are higher across the board to gold. Although well off of the highs, we are currently trading up about $2 on the day. 1292 and change. Now the low is 1280.60, the high 1288.40. Silver also trading higher, but in terms of percentage gain is actually outperforming gold, with gold up 0.17%, silver up 0.41%, almost 0.5% on the day, 8 cents higher, 1944 current print on the screen, the low 1925, the high is 1960. More on silver towards the end of the show. Traders, what we're looking at in today's trading activity, and first of all, realize that we are in the tail end of the summer, going into the end of August, and we have basically what is called an inside trading day. If you look at the range that we had, this is the second green candle that I'm looking at right here. Compare that to today's range, you'll see that the entire body of the trading range is on the inside. And if you look to the fact that we have a lower high and a higher low, the entire range is inside the range of the prior trading session. Truly an inside day. At the same time, I'm actually liking what I am seeing, because more than anything else, what we are seeing is some real supportive action in gold at around 1280, at least for now. Now, there's no question the market dipped into this particular price point right in here. You can see that trading activity as it dipped below. Whether I think the low was 73 on the way down. 65, of course, is 76% retracement. That has been really our line in the sand, because what we want to really see, if we want to take a look at this market and the series of lows that we've had in the marketplace, we certainly got a lower low, or almost an equal low, but it is a lower low. But if we break below any of these lows in here, or below 76, all bets are off on a technical basis to be looking for gold to stage some sort of rally. Now what we're getting is this 100-point rally, 61% retracement, a much smaller rally, because this rally really came to about 50% of this move down. Then we had a equal move down, 50%. You've got 50% up here, 50% down there, traded just below 1280, and is now been actively trading above for the last couple of days at price point. That to me is significant. Now, the one thing that we realized, with very, very light volume, going into the end of summer, we could get volatile swings, and I'm not convinced we're getting an absolutely true indication of the market, but summer or not, traders are evident in the market, and they are making bets by placing trades. Now, one caveat really before I go in and talk about how I really foresee, or look at this particular chart in which we've had these series of higher lows here, series of lower highs here, and we are in what I believe to be a compression triangle right now, because that range continues to decrease. When we took this market, or when gold took prices down on this most recent sell-off, it didn't quite reach the bottom of this support line. So my question has been, and this of course again is on a technical basis, will we see the market kind of drift lower at one more time and then move back up towards the upper level of the support? Of course, my sense is that as we get closer to the apex of this triangle, we are building energy. The energy, according to this theory, will be building as long as that range continues to narrow. And narrow is absolutely what we're witnessing in the market when we take a look at these series of lower highs, not too bullish in any kind of shape or manner. But then when we take a look at these higher lows, well, that's not all that bearish either. In other words, when we have this tightening of range, what we're really doing is building energy within that range. And my sense is that once we get closer to this apex, we will see a sizable break in the market. The one thing that a compression triangle does not look to uncover is which way it will break. And you can go by the basic theory that it will break towards the prevalent direction of trend. And if we were to ascertain that, very, very short term, the prevalent trend has been up. Longer term, the trend has been down. And that's why I have, in terms of the technical indicators that we look at, some mixed messages coming through. Nonetheless, we are trading within this triangle. We have not broken out of this range either to the downside or to the upside. My sense has been that it will move to the upside on the breakout. But traders, that's my sense. In terms of technical evidence of that fact, we don't have it except for an Elliott wave count that we have been working with that shows us that we could in fact be back in an impulse phase. However, the fact that we have been getting, especially on this last rally up here, the fact that we got that lower high really put some cold water on that theory, because we needed to see a higher high. And so what we're getting is a different type of retracement in the market. So whereas I thought once we hit the 61% retracement level, and that was right here, of course, and then began to rally up, we really wanted to see it break above this particular high here to really signal and give us some real strong technical confirmation that we're back into a rally mode, because then we're looking at something like this where the market goes down, it retraces, but then moves up and makes a new high. We certainly didn't see that. What we are getting is this compression. And that's why, as I said, that particular model has less weight than it did previous or before this most recent correction in the market. Right now, what I'm looking at is to see whether or not gold can hold 1280 and build a base and find support. If it does, my sense is that it will build support and continue on this upward channel or upward track. However, if it breaks below this long-standing resistance line at any point, then we are certainly going to release energy and release it to the downside. So for that reason, I have been more cautious in looking for a solid entry point in the market, but we are beginning to see the signs that we look for, but we are still on a holding pattern in terms of positions in the market. Now, in terms of a technical basis, I'm much more pleased with what I'm seeing in silver. Now, nonetheless, again, we're looking at very low volume, thin liquidity in the market, but this line in the sand at 76% was 1935. We did dip below it on a couple of occasions. We had this tremendous, basically a shooting star, you can call it, an inverted hammer, because that's what it would be after a defined downtrend. You would have to label this an inverted hammer, but you have such a small body on the candle that it would almost be a doji, and it would be a tombow doji or a gravestone doji is what the label would be for that. What that tends to show us is consolidation in the market and a point at which neither the bulls nor the bears have absolute power or control in the market, a pivot point. Now, when we take that into account with these last 3 days, we get a red candle, a star, and a green candle. In other words, what we are seeing is a variation off the Three River Morning Star. We are certainly not getting that in gold. Gold was at inside trading day, whereas here, in terms of the bodies, you can't go in terms of the high because you've got this extreme high in silver right here. But in terms of the straight bodies, you are getting a higher high, or a higher close, I should say, than the open of the prior candle. You are getting a star, but these are all very, very small bodied candles, not really indicative of what you look for that variation. If you take a look at this Three River Evening Star and compare the body sizes, this long red candle, large green candle is that final move up, your pivotal candle or star gapped in the center. This is what I mean by when we look at these particular body sizes down here, there's no way to say that they have any kind of real strength whatsoever. Nonetheless, they are worth noting, and we're finding support at the 76% retracement level in the same way that we're finding support in gold at the 61% retracement level, and that, of course, is at 1280. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow on Thursday for another daily update and review. Bye-bye.